Yo, what's up, everybody? It is Friday, April 4th. I wanted to put this video out before I head out to my boxing session, Friday night sparring. I had a really nice email today. I had a bunch of nice emails today from subscribers. One guy in particular said, Mike, I want to thank you. I've been sleeping like a baby because you got me into TLT. TLT, of course, is the longer-term Treasury ETF. And, you know, I made the video earlier today about treasuries breaking down through the 4%, the 10-year yield below 4%. We got down, I think, like 386. And then Powell dumped on it a little bit. He came out with hawkish comments. But, you know, that's him. He's bought into the inflation scenario big time. You know, we'll have to see. But I still think that the bond trade is a bullish trade. And, you know, that goes all the way back to late last year when I said to you guys, that's a trade that nobody's paying attention to. I said 2025 is going to be a surprise, man. I jotted down a lot of the headlines from late last year, and everybody was talking about, you know, all the big shots of Wall Street. They were all talking about, you know, big rally in 2025. The economy's going to boom, U.S. exceptionalism, all this stuff. And I was telling you guys, like, things are going to change. And let me just clear up. It seems like there's some confusion out there, like, you know, people saying that I was bullish. I've been saying that the flows are very strong, but almost every single video that I've been making for the past month, I've been saying that the debt ceiling has to be increased because we're having a problem with reserves in the system. I mean, I did this whole analogy of the bilge pump where I've been saying, like, yeah, the flows are really strong and it's hard to stay bearish when I look at the flows, but until I said there cannot be a sustained market rally until you raise the debt ceiling. I don't know how much more clear I could be on that point. And really, like, the main trade, if you want to call it that I've been recommending has been in treasuries. So that's panning out very, very nice. We had a big down move in silver and gold today. You know, I mean, you know, that was another thing that happened today. I had to have a debate with somebody. Like, it's not going to, those are not going to play out well in a recession. Those are economically sensitive commodities. And if we're going to go in a recession, which I don't know, we had a very strong job report today. I said gold was going to go into a correction. If we go into a recession, there's a lot more downside to gold and silver. I mean, silver wiped out all of its gains for this year, like in 2 days. Boom, it was gone. All right. So just be careful with that, is all I'm saying. What else do I want to say? That's really it. I got to head off. I got to head out to my boxing session, but it was a big down day. The Senate will vote tomorrow on its budget package. Then it goes to the House next week for the reconciliation. I think there's a $5 trillion increase in the debt ceiling in this bill, in this package. So that if that happens, you know, that's what I've been saying we need to wait for. Once that happens, a lot of these issues with system reserves will be dealt with. And I think we'll get at least an interim bottom or an interim rally in the market. You know, down 2,000 something today, 2,200, whatever it was in the Dow. From what I understand, it was a record volume. To me, volume is a measure of urgency. It's a measure of emotion. People want to get out. People want to get in. You could understand who wants to get out. I mean, the market is going down. People get scared. I actually did some more buying today on individual stocks. I like it when it's like this. You know, like, to me, the market's on sale. I take a long-term time horizon. I see stocks coming down. I see, good names, high quality names, leaders in their field, stock prices coming down. I like to go in there and pick some up, okay? So stick with that bond trade, and we may see some backup in yields, over the next few days. That does not change the outlook as far as I'm concerned. I mean, today's price action was a little bit dictated by Powell's comments. All right, I should say more than a little bit. I mean, we had a nice rally going, and he came out still with the hawkish tone, like I mentioned. So some profit taking towards the latter part of the day. And yeah, that's it. We're just waiting on the debt ceiling. We're waiting on the final package that comes out of the House. There's going to be tax cuts. There's going to be spending cuts. We'll see what the net effect is. But the most important thing right now is to get that debt ceiling increased. And then we could deal with this problem of, system reserves and how that's been kind of, messing the whole situation up. So anyway, I got to run, and have a nice rest of the afternoon, and have a great weekend. Bye.